everybody, and welcome to Masters of Real Estate. My name is Mathew Owens, and today I'm going to talk about how to analyze the market value and market rents of a property in a changing economy. So right now, we know there's been major changes that have occurred. There's been changes in interest rates, changes in the market, lack of supply, lack of demand, and it's really, really important to dial in the most important parts of your fix and flip or your analysis on the rental properties and things like that to make sure that you are doing your math correctly. So the biggest hindrances to success on a fix and flip project or a rental property is understanding market value, understanding market rents in this time, in this market, as well as understanding your renovation figures. Those key things will make or break your renovation, assuming you got the right team in place and the right management, the right contractors. Those people will absolutely break your deal if you don't have those dialed in. But the most important part of analysis is understanding where we are in the market and how to do it correctly. So today, I'm going to talk all about how to analyze these properties. So I have some examples coming up that I'm going to show you. I'm going to share my screen with you guys so you can see how I do it, how I analyze properties, and give you a little bit of commentary to understand my thinking when I'm analyzing these types of projects and analyzing the market values of these assets. So let me go through and share my screen really quick here. Let's see. Okay. So right here, we have a breakdown of one property that, I've basically purchased, and we're looking at the property location of 4076 Kerwin out in Memphis, Tennessee, in a different market. I live in Southern California. You can do this anywhere in the country. So extremely important to understand how to break the math down and pull your comps. So what I'm doing is I'm purposefully pulling comparables around my asset. So in this case, I pulled multiple properties here. My property is a 3-bedroom, 1.5 bath, 1,409 square feet. And I pulled comps around the same thing, all 3 bedrooms, 1.5 to 2 baths, or sometimes 1 bath if nothing's available, to try to understand and get a comparable property to my asset. Now, you'll notice a lot of these are, or all of them are, within a mile radius on the distance side over here. When we are, looking at these properties, we are looking preferably within a half a mile, sometimes within a mile. The more rural you get, the further out you can go when you're analyzing these properties to make sure that you are getting comparable neighborhoods, getting comparable market segments, because one neighborhood can be completely different than another one, including even a block away. So you want to be very, very careful from one street to the next, what is a viable comparable and not. So this one in particular, the first comp on 4022 Kerwin, is about 1,500 square feet, 3-bedroom, 1.5 bath. Very, very good comp right next to my property as well. A very recent comp. It sold on 11/7/2023, and it sold for $160,000. So in my analysis here, I have about a 1,409 square foot property. Now, if this sold for 106, and that's about $103 a square foot, I'm going to make an adjustment down to 155 for the difference between the 1543 and the 1409 square foot. But I'm not going to make a $103 adjustment. I'm going to do what a lot of the appraisers do and give slight variations, not full variations of the value, right? Giving a discount to that property. So based on a $35 per square foot estimate, which is what I see a lot of appraisers use on an asset like this. Now, it could be totally different in a California market or a high-end market where the price per square foot is a lot higher. You might have appraisers adjust things at $100 or $200 a square foot in that kind of situation, right? So I use $35 a square foot in this general matrix because that's what I see a lot of the appraisers in this particular market using when they are making their adjustments. So I was able to adjust down to 155,000. Now in this case, I also, if this happened to be, a 3-bedroom, 1 bath, for example, here, I might want to make another $5,000 adjustment or $2,500 plus adjustment to get to 1.5 baths or 2 baths if that's a difference between that comp and my subject property. So really being able to dial in the differences in what appraisers use for adjustments. So, they're going to make adjustments for bed and bath. They're going to make an adjustment for square footage. They're going to make adjustments for condition. They're going to make adjustments for layouts or land or the street that it's on. If it's on a busy street and your other comp is not, they're going to make adjustments for those types of things, including school districts and all different types of stuff. So you want to be able to do the same thing to understand what is your property worth, but more importantly, as well as what is your property going to be financeable at as far as a market value if you plan on renting the property long term or holding it, right? And so I'm going through step by step and picking out individual comps. You notice here that I have some for sale comp in here as well that's on the market right now. In a changing market like we have right now, I like to go out and not use 6-month-old comps if possible as my primary comp. If there's nothing else available, I might use that, right? You can see right here I have a 6/20/23 comp because I felt like it was close enough to the property, but that's a little old. I'm gonna put less weight to that comp. Remember, this is a art, not a science when you're comping out properties, right? So you're making a justification for value based on what you see out there with regard to comps, and you don't want to push it really hard because you want to make sure that you're being conservative on your numbers. And so at the end of the day, you want to go through and pick right now comps that are in the last 30 days, the last 60 or 90 days max, especially when you're not sure what the value is going to be in the next few months or you're seeing some volatility in the market up or down. I'm usually trying to dial that in to say, let me look at my most recent comps and put the most weight to that, the most weight to the properties that are closest to mine, and then also go look at the for sale comps to say, hey, what comps are going to be available in 3 months or 6 months when my property sells or is ready to sell after renovation occurs and things like that. So I'm trying to dial it in and say, what is the trend of the market occurring? What does it look like 6 months ago? And what does it look like now by looking at those 30, 90-day comps that have sold, but also looking at the for sale listings to see what your competition is in the market right now. So you want to be dialing this in piece by piece and having a full list of your sale comps to do that. You also want to do the same thing with your rental values, but and we'll get into that in just a second, but just keep in mind here, I have a lot of comps here at 160, 143, 155. This one's smaller at 132, 164, and my adjusted average values is about 158.9. I think it might be 160 or something along those lines, not swinging from the fences on, any of the other comps like this 3-bedroom, 1 bath, 164 square foot. It's a little bit smaller. That might have been a fluke. It might have been a crazy nice layout or something like that, or some other amenity that occurred. Right now, I'm not dialing in the detail on the neighborhood, on the property in itself. I'm just getting a gauge for what is out there right now without necessarily yet doing a deep dive on these individual comps to see, is that property comparable to mine? Normally, what I'm doing is after I pull these comps and I come up with my value and I get it under contract, that's when I'm going out and I'm saying, hey, let me do a Google Street View on every single one of these comps to understand what that is. Let me go call the previous agents to understand what that comp, what happened with that comp, with their seller concessions, how fast did it move, what any other issues that came up on that particular property. You get a gauge for what your property might sell for in comparison to that and understand the differences between those comparables. Okay. So that's how you're going to gauge it. You're going to first come up with your general number here. I chose 158,000. I could push it a little bit more, but at the same time, I'm trying to be conservative and lower it a little bit here. Okay. Next, I do the same thing with my rents. I actually pull the rental comps, preferably within a mile or a couple miles of the property max. It depends on what's available out there to utilize. but I'm doing the same thing, trying to look at 3 bedroom, 1.5 baths around the same square footage as much as possible to come up with a gauge. Now, in this case, my average was 1184. Just like my average here at the when I'm looking at the comparable market rents here as well. Let me fix my mouse as it has some fun with me here. So at the end of the day, we're looking at what the averages are and saying, I'm going to make an adjustment between the two, right? I'm going to go through and find a way to make this work. And find a way to make this actually, like, so if you look at here, you're seeing a $160,000 value, and the average of all these is 153. Don't think if I have like a 2,000 square foot house when all these other ones are 1,500 square feet or less, that I'm going to get some swing for the fences number way above these max comps in the area. There's still going to be a dialing it back to the average of the area based on what that appraisal sees. And you're going to see the same thing here when you're dealing with the rental comps and saying, okay, well, hey, my average is 1184, even though my calculated square footage is 1394 here, right? So this property's already rented for 1385. Otherwise, I would have picked a number closer to the 1295 or $1,200 range, looking at some of these comparables out there, because I have an 1100 comp, I have a 1400 comp that's a little higher, a 1245 comp, a 995 comp, all the way down to 1095 and 1260. So the average on all of those is about 1184. So I might want to pick 1195 to 1295 as a comfortable range, but this one actually happens to already be rented for 1385. So just trying to help you guys understand what goes through my head when I'm analyzing these comparable sales and comparable rental amounts so that you can be successful on yours as well. Now, let's go take a look at what I'm looking at when I'm analyzing these particular properties. So the actual comps. So first, let's look at rents. Okay, so I'm pulling up the rental values on Zillow. You can look at Redfin, you can look at a lot of other data sites like PropStream or other sites that are out there to pull your comps as well. And so I'm looking at, okay, what are the actual properties that are out here? What are we looking at with regard to the the areas? So my property is right here on Kerwin Street, and I see a 925, I see a 1300, I see an 1800 comp. That one might be a little bigger, right? This is a 4 bedroom. That's why that's a little bit higher. 1300, 3 bedroom, 2 bath, or 1250, 3 bedroom, 2 bath, 1316 square feet. 1100 here as well, another 1200. That's another 3 bedroom, 1.5 bath, a little smaller than mine as well, another 1295. So I'm trying to stay in this general area here when I'm analyzing the comparable sales and comparable rental amounts when I'm pulling my specific comps in the first place. Okay. So next thing is looking at the sold properties in my general area. Okay. So I see a 160, I see a 185, I see a 102, a 140s here. Now, look at this 140, very close to my property here as well. 3 bedroom, 1.5 bath, 1163 square feet, a little bit smaller than my unit at 1400 square feet. This is 140, still smaller than my unit. This one at 160 is, a little bit bigger than my unit. That's exactly what we were seeing with regard to the closeness of that property right on my street as well. This 185 comp is about 1,500 square feet, 3 bedroom, 2 bath. We have another one down here, 169, that's a little bit further away that I may not want to use. But looking at some of these different comps, like we also have a 102. So what's wrong with this house, right? 1,300 square feet, 3 bedroom, 2 bath. It looks clean on the inside of this thing, but it's not necessarily upgraded and fully renovated and upgraded to a higher end standard. This looks like a rental property type comparable. So keep in mind, many of the things on here could be wrong too. You want to be verifying these with the MLS, looking at the actual MLS comps too when you do this. So I get my initial gauge like this, and then afterwards I go back and I try to pull all the MLS comps to try to look at those too to get a full picture. Same thing, prop stream, title companies have reports on comps. There's rentometers, there's other comps out there in a bunch of different ways and sources that you can go to get the information you need in order to comp out your property correctly. Okay, so the next piece is looking at the sold or the for sale properties as well. You can see same Kerwin Street, right here as well, where we are basically at about 180,000 here for this one. This is a 4-bedroom, 2-bath. It doesn't say the square footage though, so I'm going to need to go look that up on the MLS and see what that looks like. I have another 126, doesn't have the square footage, 3-bedroom, 1-bath instead of 1.5. Another 133 comp, 3-bedroom, 1-bath. Again, doesn't say the square footage. Many times the MLS listings are now not sharing their listing data and their square footage data with Zillow, Redfin, and the other sources because they started competing with them. So you need to go do some more backup on what these look like, and pulling the MLS comps will help you with that as well and help you get that, general understanding. Now, keep in mind here, when I'm going through and doing this, I'm actually looking at where these properties are in comparison. So if I pull my whole list, this is the general mapping of these comps. I'm looking right in that same area as best I can, as close as possible, and to pull those comparable sales to make sure, hey, I'm comparing apples to apples. And like I said, I will literally go to the street view of every single one of these and say, what does my neighborhood look like? Let's go up and down the street in the street view. Let's look at the other comps and go up and down the street on the street view. Does it look like the same kept up neighborhood, or is it a trashier street, right? What are the differences in those neighborhoods and those specifics, so that you understand what that looks like? And an appraiser will help, a property manager will help. A lot of them know that there's, detailed lines. Like, you could have this street up here that is a dividing line where everything above this line right here is could definitely be different neighborhoods and different comps. You see this all the time. I've bought properties where on the same street, but across the street, literally on the same street, but across the street, you're dealing with $150,000 houses versus across the street are $400,000 houses, all because it's on the wrong side of that same intersection or that same busy street. So you want to be very, very careful when you are dialing in your comparables and understanding what you're really trying to accomplish here with a good gauge of your property's value, right? So at the end of the day, it's really important, especially in a changing market, to analyze this correctly. And I would even reduce your market values and reduce your rents by at least 5%, because in 6 months, to mitigate the risk of a market decline, now it could still go up. Things are not crashing or anything like that. We have very low supply on the market right now, and demand is hurting as well, but it's starting to come back with some changes in interest rates that we've seen, or some evening out and some stabilization of those interest rates. But this is how I comp out properties, by looking at all of the data available to me and making an educated estimate of my market values and market rents. And I like to estimate a little lower to be conservative on the front end. And then same thing with rents. If there's softening in the rental market, it's important to be right under market value or market rents, so that when the rents do change, you don't have a tenant that moves on you and costs you a bunch of turnover costs along the way. So I hope this helps give you guys some clarity as to, how to analyze some of these properties and make sure that you are comping out your assets correctly, so you can be successful on your next flip or your next buy and hold property. The next step is knowing what your renovation numbers are. And with inflation, it's super important to keep that under control as well, and overestimate and put renovation buffers in place and overages already built in to your calculations on the renovation. Otherwise, you're going to be biting the bullet and coming in over budget on those renovation numbers. So I hope this helps. Have a great rest of the day. If you want to learn more, you can go to MathewOwens.com and get, access to us, all of our investments and the strategies that we implement. And you can follow us on YouTube or follow our podcast and understand all of the differences and intricacies of real estate in general and how to develop cash flow streams that you can retire off of long term. Look forward to talking with you guys soon and have a great rest of the day. Do you want to learn how to create financial freedom in your life through real estate and take your investing business to the next level? If so, you can follow us in one of the following ways. First, you can take one of our free webinars on how to analyze property, how to raise capital for real estate, and how to market and find deals. Three of the key pillars to becoming a successful real estate investor. Number two, you can join us on our mailing list where you'll get tips and tricks on real estate investing directly to your inbox. And number three, you can take our 6-month real estate course that teaches you every aspect of real estate investing you can think of, and more importantly, create financial freedom in your life through real estate investing strategies that I teach. If you want a master's in real estate in 6 months, this course is for you. We're going to go over how to raise money, promissory notes, syndications, fixing and flipping, buy and hold investing, tax and legal structures, self-directed retirement accounts, financial education, how to run a business, how to market and find your deals, and most importantly, how to create that financial freedom in your life so that you can stop trading your time for money and create passive real estate cash flow that you can live off of. If you're interested, go ahead and click on one of the links below, and I look forward to seeing you guys on the other side.